Hello traders and welcome back to my YouTube channel, IPDATrader. Now in today's video, we're going to be talking all about order blocks and POIs, right? Because obviously, if you trade smart money concepts, you know, especially if you look at higher time frame blocks, you will see sometimes that you're working with, let's see over here, you're working with 50 to 60 pip zones. So sometimes it can get very difficult in terms of trying to understand what is really happening in your POI and essentially being able to execute that way. So what I'm hoping I can do with this video is sort of provide you a little bit of a guide or a help in terms of understanding your points of interest or order blocks, whatever you want to call them, and really seeing how we can refine those areas, work with those areas, and essentially make them viable for you to actually execute trades. So with all that being said, guys, we're going to be jumping into the into the drawing board, and we'll just go from there, right? We're going to be discussing some ideas, and I'm hoping I can provide you some value and information in regards to that topic. So with all that being said, guys, let's actually get started with today's video. So traders, here we are on the drawing board, and we're actually gonna get started over here. So as we said before, guys, we're going to be discussing, let me see over here, everything you need to know about order blocks, POIs. Essentially, I think POI is the better term because order block is just a POI type, okay? So we're gonna get started over here, and the very first thing that you will find is the following, right? So let's say as an example, right, very simple, we have a market of this sort, right? You have a potential move up like this, and you go to the charts, you try and see what's happening over here. Once again, you say to yourself, hey, break to the upside, break to the upside. Once again, we have a bullish trend established over here. Okay, everyone should agree that this is a bullish trend at this point. Now you're trying to frame your points of interest, right? And once again, we have different types. Okay, so the very first thing that you need to know, and I've said this before multiple times, is you only want to be looking at POIs which are discounted. And by discounted, we mean in terms of the expansion leg, whether you're using this as your expansion or you're sort of drawing, sort of understanding that this is an expansion and this is your second expansion. That is completely up to you. But as an example, let's say we're working with this leg over here. This is your low, this is your high, this is your expansion coming up. And now you're wondering, well, what POI should I use? Because what you may find is that you will have plenty of them. You will have probably one over here, maybe even one over here, over here, over here, and now you're confused and you're trying to understand, how can I work with this different POIs? What can I do? Well, the very first thing, once again, you want to do is avoid POIs that are not discounted. And if you're working with this leg over here, we're going to say that everything below this line over here is discounted and valid, okay? And that means that that is below the 61% expansion of the leg. That is going to provide you with a better probability in terms of understanding everything about your points of interest. Now, the second thing that you want to do is you want to avoid POIs that are imbalances, right? So as an example, let's say that this movement up is just bullish candles over here, right? And you have a POI, let's say as an example, we had this, right? Move down, move up. This is a bearish candle, and now you have a POI over here, okay? And you're seeing that you have imbalances above, which is great because now you can say to yourself that, hey, if we come back down here, we're filling imbalances. This is a great area to buy. But what you need to pay attention to is that there should be no imbalances below as well, right? If you have more imbalances over here, once again, if you're confused with the imbalance video, term, you might want to see the imbalance video, which should be somewhere in my channel, right? But going back to topic over here, if you're seeing imbalances below your bullish block, in this case, you want to be avoiding that because imbalances are likely to get filled, and you want to trade when imbalances are being filled into your point of interest, okay? So that is the very first thing, right? And we're going to be writing this over here, and do not worry, we will get into more detail in a second, right? avoid POIs with imbalances above or below it, right? Whether that is a bullish or bearish POI, then you get the point, right? You want to be avoiding that. That is the very first thing that you need to understand. And the second thing that you want to understand is that, as an example, right, we're going to be going through this, and I'm going to make sure everyone is able to understand this. So let me quickly remove all those candles. And let's say, as an example, price is now trading into this block over here, right? It essentially retraced over here, right? You want to see weaker bearish price action. It took this low out over here, which is swing low liquidity. So now you can say to yourself, hey, swing low plus imbalances is something that is being filled into my potential buy area, which is great. And now let's redraw this again. You look at this area, you say, great, this is my point of interest. This is where I want to be looking for buys. And you look at this, right? And you see, hey, this is a 60 pip zone, 70 pip zone. This is going to be very difficult if I'm trying to monitor order flow, right? Because within this block, order flow can shift back and forth from bullish to bearish, right? And it can get very confusing. So what you want to do is you want to understand the different sections within your point of interest, right? Even though that's correct, this is a point of interest because obviously you will have bearish movement that led up into a bullish movement that broke structure. Hence, this becomes a valid point of interest over here. What you want to understand is that you need to determine different sections within your block, okay? And this is something that is covered in the POI section for those that are in the mentorship, but essentially what you will find is that you will have potentially a breaker block over here, which you can monitor, an origin block over here. And as you can see, I'm not what's the word? I'm not really worried about every bit of price action within my POI. Within this block, which is, once again, let me choose a different color. Let's see over here. Within this block, which is a 70 pip zone, right? Let's say that block is a 70 pip zone. What you've now done to yourself is that you've refined that potential block into two different pieces, which is, once again, you have your breaker block over here, which possibly could be 10 to 15 pip zone. So that is, once again, easier to work with. And your potential origin block over here, okay? This is how you need to frame your POIs. You need to be able to break them down into different sections so that you don't get confused trying to understand, okay, where are we in the block? Are we really going to shift now or should I keep waiting, right? You want to denote specific areas in your block, right? As an example over here, what we've done is we've denoted the breaker block on top, which is an area that you can monitor. And now as price trades into your block, now you have a 10 pip zone to work with, right? And if you see your shift within that breaker block, once again, it needs to respect the lower boundary of this block, then you are more than sure that, hey, we've been reacting to this block. We've provided some shifts. I'm happy with what I'm seeing. I'm taking a buy position over here, and I don't need to worry about the 50 to 60 pip zone below this breaker block because I'm focused on the breaker block over here, right? And this is just a simple example, right? As an example, once again, you have your breaker block, and this time, instead of providing you some shifts, it trades deeper, and now you're deeper in your block. And now maybe you're reaching a point in your block where there is just imbalance, right? Because this is very likely to happen, and we're going to be showing chart examples in a second, but I need to get you to understand this. Within your point of interest zone, right, there's going to be areas of inefficiencies which you want to avoid. So over here, if you see a shift happening within your imbalance, you don't execute. You keep waiting. Why? Because even though this is technically the zone, you're in the imbalance of the zone. So you want to be waiting for the other refinement you've essentially played for yourself, right? Which is the origin block, which is always going to be your best bet either way, right? So instead of getting confused and trying to execute everywhere in your block, what you have to do is you have to refine different areas in your block that you're going to be willing to monitor. That's going to be much better, right? This time, instead of taking a buy over here and taking a loss, because once again, you look to the left, this is the imbalance part of your block. You're simply waiting for the refinement, which may be a 15-minute exaggerated wick, it may be a 15-minute origin block, order block, whatever it may be, right? As an example over here, we have a origin block, which could potentially be a order block as well, right? So you're now waiting for that refinement to hit. And if that hits and you see your shift, then you're more than likely that you're in the right spot. Because once again, you didn't FOMO in any of these parts of the block. You waited for one, the breaker, which is always going to be at the very top for bullish blocks, and the origin. And you avoid everything that's in the middle over there, causing you confusion and making you sort of not understand what's happening. So what you do instead is you wait for these specific refinements. And just in case, if this is not clear enough over here, what we're going to be doing now is drawing a bearish example, which should make everything sort of easier to understand. And then we're going to be writing some points over here, and then we'll probably go back to the charts, right? So I'm going to pause the video for a second, and I'm going to work on preparing a bearish example for you guys. So let's go over here. Let's say this time you have a market like this. You initially pushed up, right? You broke structure over here, boom, boom. And now you're understanding that we're in a bearish environment. Once again, you have 4 structure points in the same direction. You understand you have a bearish trend. And let's say, as an example, this is the zone that you're looking for price to trade back into to potentially drop. Great. Let's say you were smart enough and you refine that to, let's say, and we're actually going to be drawing some candles over here. Let's say that you refine that to this potential last up move, right? Denoted in green before the potential down move. And now you're saying to yourself, great, this is a nice area for me to actually monitor. But once again, you do that, you draw your zone, and you realize, hey, this is a 70 pip zone. It's going to get quite difficult for me to try and see how am I going to be executing in this zone, right? So once again, you could do the same thing, right? You can say, hey, I'm going to be monitoring the breaker block on its own, once again within the zone, right? And I'm going to be monitoring, as an example, the origin over here, right? And now you've reduced your zone, and as price starts trading into your block, right, you're just simply going to be focused on the breaker. If you see a protocol here, you can execute, and you are going to be focused on the origin. You're not going to worry about what's in between, because if this is imbalance, you don't want to be trading that, okay? So another tip that I can give you is for bearish blocks, as price is trading, let's remove that. As price is trading deeper and deeper into your block, right? Let's say, as an example, price is coming up and it starts hitting your block, but it's trading deeper and deeper into your block. What you want to do is you want to refine the lower boundary over here, okay? If price is coming up, you don't want to be sticking to your original zone, which may have been over here, right? Now price is over, is reach essentially 50% of your block, as an example, right? Then you want to be reducing your block size, and now you're working with a target with a smaller area, which is going to allow you to have better executions, right? It is very important that as price is trading deeper and deeper into your block, you start refining the lower boundary of your block, right? Now you can use this. And once again, you don't want to be touching the upper boundary for bearish blocks, because this is always going to be part of your block. But the lower boundary is going to get refined as price trades deeper and deeper into your block. That is something that you have to understand extremely well, and that you need to start using in your analysis, right? You're not trying to make it difficult for yourself. You want to be refining your areas as price is trading deeper and deeper into your block. And now what you've done to yourself is from a 70 pip zone, now you're working with a 20 pip zone. Now it's easier to understand, and now you know exactly what is being hit. And you don't need to worry about the multiple shifts that you're going to be seeing on the way up, because once again, price won't travel in a straight line, right? So you will get confused trying to, essentially wondering, hey, is this the shift? Should I take the sell now? Should I keep waiting for the refinement? No, now you just have specific areas in your block that you're willing to watch, And once again, I suggest you work with the breaker and the origin for the most part, because usually what you will find is that in between you will have imbalances. Even though that's part of your POI, those are imbalances within your POI, so you don't want to be trying and trading that, right? So I really hope that this example made sense over here, and we're going to be simply summarizing it with this tool over here. So once again, avoid POIs with imbalances above and below. Refine your blocks to specific areas such as breakers, origins, IFC, FUs, whatever you need to do, right? You need to be able to refine that zone to specific areas. Also, always reduce your block size as price trades deeper and deeper into your block. Those are key ideas that I'm giving you here that you need to start applying, because it's gonna help you quite a bit, right? You're not gonna be worried about oh, this zone is 70 pips. Where is the protocol gonna print? I don't know. It's shifting now. Is it shifting later? Now you're waiting for specific areas. You say, hey, this is my 8-hour block, as an example, right? Let's say this is gold and this is your 8-hour block that you're watching, and you say to yourself, hey, I'm gonna be making it easy for myself. Instead of watching this entire 100 pip zone, because if you look at something like gold, you will see that specific blocks could be hundreds of pips, right? So instead of working with this 100 pip zone, you're saying to yourself, hey, I'm going to refine that to, once again, my IFC structure as an example over here, and my breaker at the very beginning. I'm gonna denote the 50%, so I know when we're hitting the 50%, and this is how I'm gonna be working with. I'm not worried about the hundreds of pips of this zone trying to catch an entry. I'm just worried about my specific areas within my block. That's what you need to understand, right? It's all about refinement. It's about understanding where are we in the market, where are we likely to tap into, and what should really happen next. So with all that being said, guys, that was sort of the theory that I wanted to cover today. We're going to be jumping right back into the charts, and we're going to be going over some examples of refinements and selecting specific areas within your blocks, right? Because that's essentially the topic of the day, and that's what we're going to be covering just now. So give me a second, guys. I will pause the video once again, and we'll just go back to the charts and essentially take a look at that. So guys, we're now back on the charts, and for this last section of the video, once again, we're going to be applying what I just spoke about, right? So we're looking at a BTC over here, and this is actually an example that I showed one of my students. So I think this is going to function very well for you to actually understand what is being taught over here. Okay, so we're looking at this market, right? And you look at this, you say, hey, this is a break to the upside, right? As we traded above that wick, we've established essentially bullish structure, right? We can denote the swing points. That's no big deal. You can say, hey, we had a low over here. We had a high, lower high, higher low, sorry, right over here, higher high. Great. We have a bullish trend happening over here. Now you're looking at your POIs and applying the rules that I gave you before. Once again, you look at the origin of the impulse, you fib that, and you say anything above the 61, I'm not interested. Why? Because it's not discounted. Price is likely to tap deeper. Great. So you everything, and let's actually denote that over here. From the 61% and up, this is no interesting for me, right? All these POIs over here, you see you have a block right over here. You see you have an FU candle right over here, right? Doesn't matter. It's not discounted. You're not worried with that. Great. Now you're looking and you're saying, hey, this is the block that I'm working with, right? And as you can see, if you drag that across, this is a, well, God knows how big this is, but this is essentially a very big zone to work with, right? So what you can do, once again, is, and what I would do, is actually refine that to this last down move before the up move. But once again, this is still very big to work with, right? And not optimal. So what you want to do is apply what I've just told you, right? So as an example, we're going to be going over some refinements. You could say, hey, I'm monitoring this specific breaker block over here. This is interesting, and once again, I'm not going to get into details on why there's a breaker block over there, because that's essentially covered in the mentorship, but so far just understand the idea of refining your blocks, right? You can say, hey, this is a breaker block. I'm going to be monitoring that specific, right? That specifically, and I'm going to be monitoring, you can say, the FU candle over here. And essentially what you've done now to yourself, right, is you've essentially removed all these pips over here within the zone, which, as you can see, line up with it being in balance. And now you don't need to worry about this section. Now you're only focused on finding something that you like over here and over here. Even though you had a very big zone, now you've refined that. And once again, you can do that multiple times with multiple refinements, right? As you go across the different time frames, you will see that way better, right? What you will find is, as an example over here, this breaker block is probably able to be refined to this section over here, and this FU candle, well, it's essentially staying the same. You can say to yourself, hey, these are the two areas within my block that I'm going to be interested in looking at, right? You have the breaker block on top. You have the FU candle. You can potentially add a regular order block over here, right? You can say, hey, this specific block within this higher time frame area zone, I'm going to be interested in looking at, and you can drag that across, and you can now wait, and you can safely remove that. And what you've done to yourself at this point, right, if we go back to the 12-hour chart, is you've given yourself specific areas within your block, and now you're no longer confused trying to understand where the hell in the block are we actually going to shift and change direction, right? Now you're just focused on the specific of the blocks. That's essentially everything you need to know about them, right? You have to bake, and once again, let's look at an example over here. This is your block entirely, right? But what you can do, once again, is refine it, right? Instead of working with this massive zone, you do, hey, this is a breaker block on a lower time frame. I know that because of the exaggerated wick with the imbalance to the right. So that's great. I'm going to be watching this area in particular, right? Next up, you can say, hey, I like how this FU candle looks on top. I'm going to be working with this area. And now instead of having this entire block, you've now refined that to this particular area over here, which is your breaker block, and the origin on top. That way you're going to have a higher rate of success, honestly, because you're making it so much easier for yourself. You're now no longer worried about the entire zone and trying to catch an entry over there. You're just simply refining that to specifics within your block, which is the key, right? So that's essentially, guys, everything that I wanted to discuss today. Once again, I'm not trying to make this video too long, but I believe it has great information. So we're going to be summing that up rather quickly, right? Refine your blocks. Refine your blocks. Understand the different sections. Very important. What else have we discussed? Avoid imbalances, once again. Avoid imbalances, POIs, right? Very straightforward. Reduce your block size as price trades deeper and deeper. As an example, just to visualize that idea, what you can say is, as price is coming up, and let me actually grab my tool, as price is coming up, right, you get a reaction over here most likely, but then fails and trades deeper, great. Now you can remove this entire zone, right? And once again, you can just simply refine that to where price is currently hitting. And now you're making it easier, and now you're having a smaller zone to work with, right? And that's a very important idea. You want to be refining that area that you're watching as price is trading deeper and deeper into that block, okay? So that is essentially everything that I wanted to cover today. I really hope that this video provided you some insight and information. It actually made sense, right? Now going on forwards, when you're looking at your charts, please apply those ideas, right? Instead of working with a 200 pip zone, make sure you're selecting specific areas in your block. that are going to function very well for you to actually try and execute ideas, right? So with that being said, guys, thank you very much for listening. If you actually enjoyed the video, feel free to drop a like and a comment. I really appreciate that. I'm going to be sort of going over the comment sections as I like to do. And yeah, you are free to sort of provide video ideas. I can go into that, no big deal. And essentially, thank you very much for listening. Thank you very much for watching. If you made it through the entire video, you are a legend. And remember that the mentorship is back open. If you're interested in that, that is a one-time fee and you will be in it forever. So feel free to check the link in the description below. I do not sell any other services, no sort of account management signals, none of that. So if there's people pretending to be me selling you that, please be aware of it and do not fall for the scams because they will most likely scam you. So with all that being said, guys, thank you very much for listening and I will see you guys very soon.